Hi everyone, this is Jesse and this is the PlantStock channel. And tonight we're going to take a quick look on the Very Good Food Company's Q3 report. So the Q3 report was recently released just 2 days ago. And if we take a quick look at the key financial highlights and look at the revenue, it's gone up around $1.4 million of 26.6% over the prior quarter and 322 year-over-year gross margin of 39.2% over our 9-month period, an improvement from 28.7% in 2019. Now that is impressive in itself. Just look at these 322% year over year. Considering that Roni Rona is getting worse and worse, that is good results to see. And it's impressive. I think it does have a lot to do with their e-commerce sales. And when we take a look at the production volume that was sold, it was about 127,000 pounds in 3 months period, an increase of about 37% compared to the prior quarter. Also good results there. Total assets seem to be around $16 million, including a cash balance of about $8 million compared to only $405,000 in the year prior to this. Now, this is a 20x difference in the cash balance. Well, that's impressive in whatever you compare it to. Now, what is interesting about this is that apparently Very Berry, they've been paying off a lot of debt and been reducing it to a merely $40,000. And that sounds really good in my book, but it also keeps me wondering, is this the best strategy at the moment? Shouldn't they be investing money into growth, R&D, expanding, marketing, things like that? Well, we're going to talk more about that as we move on. And when we take a look at their net loss, it was about $4.5 million for the third quarter, or about 6 cents per common share. Now, these kind of results might worry some people, but in my opinion, this isn't negative, considering that this is a growth company. We want them to put in their money into marketing, ways to expand a company, R&D, and so on. We'll talk more about that too. Now, if we let the CEO actually explain what he felt about this, we are particularly happy with our results this quarter as we were able to generate an increase in top-line revenue in spite of production constraints and worsening Roni Rona that has negatively affected our industry peers. As we move closer to the initial launch date of our upcoming facilities, we remain committed to operating our business in a focused and disciplined manner. We are making the necessary investments to ensure that our new facility launch with the right equipment and team in place to scale rapidly and meet the growing demand for our products. Well, to me, this sounds like a man with a plan. He seems pretty confident of where they're heading right now. And I must say, if we take a look at the key corporate highlights of Q3 2020, one can understand why. On August 31, 2020, the company signed a lease for a production and distribution facility already fully built out for food production located in Patterson, California, the Patterson facility. Now, I think a lot of us know about this, but it's really good that we're reminded of the possibility that this company, Very Berry, has for the future. And if we move on here, we actually see some more positive news that I haven't seen before. The Patterson facility will supply the U.S. market long-term and is expected to be capable of producing up to 98 million pounds of annualized product. Previously disclosed 28 million pounds. Now this number, 98 million pounds instead of 28 million, is a huge difference, obviously. It's more than 3 times. So that's something I'm going to want to look deeper into. Obviously, this is numbers that I believe we can trust. Otherwise, why would they put this officially on their home investors page? But it's still interesting to look into. But it is great news nonetheless. Also, we found out that they have recently come up with two new meat alternative products under the Very Good Butcher's brand, the Very Good Pepperoni and the Very Good Dog. Both have had positive success and round out our product portfolio. And also, guys, if we take a look at their key subsequent events, Very signed a lease on November 11, 2020, as I think we know, to secure a new production facility in Vancouver, British Columbia, their Rupert facility. Now, what I find more interesting here is, besides the fact that it's basically already functioning, it's ready to be used at the moment, what I find fascinating is looking at what they expect to produce here. The Rupert facility is expected to be capable of producing up to 37 million pounds of annualized product to be phased in over the next year, representing an approximate increase of almost 2,700% over expected annualized production capacity of the company's Victoria facility. Now, that's amazing gains if that's going to happen. I think it could be wise to just mention that obviously these are probably perfect conditions. I expect them to do really great things over the next year, over the next 10 years, over the next 20 years, no doubt. But still, remember, this is an investor's page, and they tend to probably give out the most perfect situations. It's just reasonable to think that. And finally, if we take a look at where they sell their products, various products are currently sold in approximately 275 retail outlets, which represents 6% of the total number of retail stores of both smaller independent grocers and national grocery store chains, including Whole Food Markets, Fresh Saint Market, Choices Markets, and IGA. With a waiting list of more than 50 prospective wholesale partners, the demand in retail is driving our expected change to sell 70% of various future productions through wholesale channels, compared to 20% year to date. Now, that is also fantastic news if this is going to happen. And considering at the moment, one of their biggest drivers has been their e-commerce sales. And that is something that I believe in, that is going to be the future. But sooner or later, Roni Rona is going to cool down, and it's probably likely that people will start buying more and more food again in ordinary stores. Even though I do believe that some of us have been hooked on just using the net and driving and getting the food directly, or just getting it delivered to your home. I know I have, and I'm going to continue doing that for sure. What about you guys? Leave me a comment. So basically, this is covering your basis. You want to be able to keep selling a lot in e-commerce, but you want to keep having a lot of product in different stores all over the country in Canada. But obviously, the same thing when they do start to expand into the US. And that's something we're really looking forward to. Now, before we put this to an end, I just wanted to tattle back to the beginning here when we talked about debt and net loss. Again, I really believe that one of the primers to get a company to really grow and expand is to use as much of your money, as much of your revenues into building new factories, putting money into R&D, marketing, things like that. Now, I'm not saying that you shouldn't be paying your outstanding debts sooner or later, but again, it's the long picture we're looking at, right? So putting the effort there, putting the money there, let's say like Tesla, for instance. I do talk a lot about Tesla. I'm pretty heavily invested in them. I do believe in their mission. For the longest time, the last decade or so, they've been getting a lot of crap for not making any profits and going minus and minus every year. And that's because Wall Street basically they didn't understand what they were doing. But basically every money they got, they reinvested in the company, reinvested in building more factories, gigafactories. And now today, basically, they're doing great, right? I mean, take a look at it. It must be one of the most successful companies throughout all of history. And it's the same kind of things that I'm hoping that Veryma Berry are going to, the same kind of strategy that I'm hoping they're going to use for the future. And I think that's what they're starting to do, right? The Patterson lease, the facility in Vancouver. I'm thinking this is only the beginning, and we have a lot to expect from them. So I'm really looking forward to that. What about you guys? What do you think about all this? Are you as happy and thrilled about this as I am? Now, I just want to remind everyone that I'm not a financial advisor. These are just my ideas, my opinions, my philosophies. Do with them as you will. I do hope you found some value in this clip. It was a bit shorter than I usually do. Please also let me know what you felt about this format. This is something I want to try out every now and then, doing some shorter clips and just kind of like keeping you up to date what's going on with our companies. All right, guys, I hope you guys will have a pleasant evening. Peace out.